connect with Margaret Yang, market analyst, CMC Markets, who now joins in on the show. Thanks so much for taking time out and being with us. Let's just get in a sense as to how you're reading into the kind of commentary as well that has come in from Donald Trump, categorically talking about how when crude oil prices are on the rise, you know, that they want prices to come down. We have Betty Wang as well joining in. But the other big talking point, Margaret, is the way we've seen the Chinese markets outperform consistently. What do you believe are the key data points that is driving this outperformance, and is it likely to continue?
Hi, yes, good morning. So we are talking about two issues. One is the crude oil price movement. Another one is how China market is going to perform in the days to come. So for the crude oil, it is quite obvious that Donald Trump's tweet on to criticize OPEC's effort to lift the price of crude oil is really having a big impact in the market. And we know that since Donald Trump took the White House 2 years back, he is very influential on the stock market as well as commodities market. So every time he tweets, there's something going to happen. Therefore, I think technically, I think politically saying people are cautious on whether or not Trump is going to influence OPEC with his political influences to try to drive down the oil prices, because this is good for the U.S. economy. And on technical side, I think oil price has advanced more than 35% since December low. So 35% rally in 2 months is likely to be overstretched. And technically, indicators suggest that oil price is temporarily being overbought and is due for a technical correction. Another thing is the China market. We saw that Shanghai Composite and Shenzhen Index both advanced more than 5% yesterday with surging volumes. So the trading volume exceeded 1 trillion renminbi yesterday. So this is the largest intraday gain we have seen in probably 2 years. And it was driven by the optimism from the cease of trade war, as Donald Trump has postponed these tariffs. And he didn't highlight a new deadline. So that essentially means that further tariffs on China is perhaps not necessary at the moment, and it is not a preferred option to optimize U.S. interest in the current situation. And we see that both countries are trying to play down these tariffs, which came to be a big threat to the global economy stability. So this decision is well received by the stock market, especially by China. And look forward, I think China market is not very fundamental driven, but it is more of political and liquidity driven. So right now in Shanghai, we do see that the liquidity is ample, and PBOC is very accommodative. They are trying to push down the borrowing rates, push down the treasury yield curve to spur lending in an effort to boost economic activity. And recently, Chinese state-owned media, they have kept saying that.
Right. Betty, I want you to come in here because, you know, it's still a very 50-50. If I go by what Trump has said, he said that, you know, he tempered promptly his enthusiasm by saying that, noting that a deal might not happen at all. And, you know, while he's going in with conviction that it is truce and they will be able to see eye to eye finally, and there would be a truce talk eventually with Xi Jinping. What do you think is the probability of how equity markets are going to pan out if at all a deal were not to happen? Because what you're seeing since yesterday, a big move on China, yuan as well reacting accordingly as well. But do you think it could reverse as swiftly too if at all a deal would not to take place?
Yeah, so I think in the near term, it seems like both the market and China and the U.S. are gathering momentum for reaching some sort of neutral, agreed sort of deal, and the market seems to have well received this kind of information sent out from both governments. And also, this is the first time that both China and the U.S. To have taken a similar tone in terms of describing the progress that they have made in terms of the trade talks. So I think in the near term, it's unlikely to see some sort of reverse in terms of how this trade deal is progressing. But having said that, over the medium to longer term, we are still of the view, the uncertainty between China and the U.S. is unlikely to move away or to shift away because, from the trade talk perspective, it's always about enforcement or implementation of how those terms have been agreed, and also, in terms of technology or who will be leading the role who will be leading the global role in the tech sectors will be still subject to the two countries sort of interactions. I think the uncertainty between China and the U.S. over the medium to longer term will be still there.
Margaret, give us a sense as to how you're looking at the Chinese economy in terms of growth, because it's growing at the slowest pace in the last 30 years. What do you think this means for the world growth, especially in terms of being an opportunity for India?
Well, I think China economy is obviously undergoing a prolonged period of slowdown, and it is still trying to find a bottom. Probably an optimistic guess is end of this year it will probably bottom up, but if things are not going in the right way, it could extend to next year and the year after. So the policymakers are trying their best to stimulate the economy with fiscal and monetary policies. But the real problem right now is the consumers. So Chinese consumers, they are not willing and not able to spend as fast as what they did before. So we see that retail sales are dropping down to retail sales growth is cooling down to decade low, and there's limited things the government can do to spur the spending. So that is the real problem. And let's come back to the stock market. I think right now a good rally in the stock market is the right thing for the policymakers, because when the market is going up, people will feel wealthier, and the investors, they have more money to spend.
Right, Margaret, as well as Betty, many thanks for joining in with an eye on the globe and all that's going on with China and